It's been quite a good quarter for JSW Steel. Our estimates were anyway pretty optimistic on the recovery that the company is expected to post, but they have managed to, sort of outpace that as well. We have a top line that's come in at 19,264 crores versus 17,572 crore. That indicates a growth of 9.6% on the top line. The EBITDA margins as well have expanded very considerably, 23%. We were expecting this number to come in at roughly about 18%, and the bottom line, there is a decline compared to the corresponding quarter, but that's because the corresponding quarter did have that deferred tax credit. The key highlights were the fact that firstly, saleable steel sales 4.14 million ton. The capacity utilization as well has more or less normalized to the levels that it usually is around the second quarter with the monsoons, etc. So it was at 86%. The exports, remember that, in the first half of this fiscal, we had companies, or rather in the first quarter of this fiscal, we had companies resorting to exports given the fact that India's demand for steel was, well, pretty low. And there was this excess inventory built up. So all of this was being sent abroad via exports. That's come down, by the way. At least JSW Steel's export contribution has come down to 28%. Now, this is important because remember that the margin profile of the exported products is definitely lower compared to, domestic sale. There's also the highest ever sale of coated products, which is again a value added or a high margin product. So it's the overall favorable product mix as well that has boosted the profit after tax, not to mention lower iron ore prices, lower coking coal prices, which have any which ways been subjected to a lot of volatility with all the news flow. So that as well has contributed to this mega margin expansion. And we could expect some more booster, to the overall cost of production and margins, because the company has bought 3 mines in Karnataka for iron ore and 4 in Odisha. Out of the 3 in Karnataka, 2 have, kick-started mining and production activities on the 25th of September. So we should see the impact of that, in the third quarter. But, it's not just, pricing and realization. The fact that the management as well has taken certain steps to ensure that their cost of production goes down. It's down, I think, by almost 10%. However, there is, I suppose this would be one negative, and that is some of the overseas subsidiaries are still loss-making. So Ohio, Italy are loss-making on the EBITDA level. But again, there are certain one-offs as well that have hit the operations of these companies. So if we exclude that, the loss figure has come down. But yeah, I think I would want to keep my eye out on that. And of course, how much more room is there for steel prices to go up? HRC prices are already at 43,000, which is the highest since December 2018. It's definitely the hot space, and JSW Steel has exceeded expectations.